Hi, my name is KARINA KAMARUZAMAN. So today I would like to give an explanation regarding the introduction for the RPGT. Real property gain tax is a tax assessed on profit from the sale of real estate, including but not limited to homes, apartments, farms, condominiums, and unoccupied land. This tax is extended to gains from the sale of stock in a real estate business as of October 21, 1988. Real Property Gain Tax Act of 1976, which established RPGT, was passed in 1976. The Real Property Gain Tax Exemption Order 2017 did, however, temporarily exclude this tax from application from April 2007 until December 2009. Real Property Gain Tax Exemption Order 2009 cancelled the exemption order as of January 1, 2010. The RPGT Act of 1976 stated that the Inland Revenue Board of Malaysia, which is RRBM, would charge RPGT a capital gain tax for each profit made from the sale of real estate or stock in real estate companies when the sale price is more than the purchase price. If the property selling price is equal to or less than its original price, RPGT is not assessed. It only applies when selling the property results in a profit. Both the disposer and the acquirer are subject to RPGT for the disposer and stamp duty for the acquirer when there is an imposition of tax on the transfer of property. Gain from the sale of real estate or stock in a real estate firm, however, may also be subject to taxation under the income tax of 1967 if they result from business dealings. Next, RPGT rates are established based on the type of disposal, including a Malaysian incorporated business, a trustee of a trust, or a society that has been authorized under the Societies Act of 1966. Next, persons who are not citizens of Malaysia and are not permanent residents, as well as the estate of deceased person who was neither a citizen nor a permanent resident of Malaysia, and besides the mentioned. So, that is all from me. Thank you.
In terms of objection of appellant, Real Property Gain Tax (RPGT) has a description in its own act to refer, which is Real Property Gain Tax Act 1976 Act 169, which examines every matter related to this tax. However, there are some matters in this act that is necessary to refer to other acts. For example, appeals. Every law in Malaysia, especially here regarding RPGT, allows appeals to be made by taxpayers on dissatisfaction with the amount of tax imposed or due to errors in the tax assessment. In RPGT Act has been mentioned that RPGT taxpayers who want to make an appeal need to refer to Income Tax Act 1967 Act 53 because it is a similar tax in terms of principle, which is the tax is imposed based on income or capital gains. Every objection made is based on Section 99 to 102 of the Income Tax Act 1967, as long as it can be applied with the necessary modifications that are required to connect these two acts. In making an objection or appeal, it must be in accordance with the Act about the right to make an appeal, the strong reason for making an objection or appeal, and the detailed appeal procedure that has been written in the Act, which need to be followed step by step. All objections or appeals also need to be objected to the Inland Revenue Board (IRB) about all the details and filing in related forms, and it will be forwarded to the Special Commissioners. There is also a hearing process that occurs when this appeal is made, which is heard by 3 Special Commissioners that are appointed by Yang di-Pertuan Agong, one of which must consist of a person with judicial or legal experience.
Assalamualaikum, my name is RAWAIDA and I'm going to explain about the right of applicants to make an appeal to the High Court. So a person who disagrees with an assessment given, he may appeal to the Special Commissioners under Section 18 of the Real Property Gain Tax Act 1976. It is in the same way that they would challenge a tax assessment under the Income Tax Act of 1967. So under Section 18, subsection B, every income that generates from the selling of the property by the applicants will be counted as a chargeable gains, and that will be as a reference to state the amount of suitable tax. So for the example, other than value the property, the valuer also should include other payment made during the process to be counted as an income, and it will value to state the amount of tax. Moreover, both the hearing of additional appeals and the appeals to the Special Commissioners should be conducted in accordance with Schedule 5 in Income Tax Act. So this should be together with the relevant amendments if there is any. Furthermore, if someone files an appeal under this Act, he is not allowed to reopen any issues that have been definitely resolved in accordance with Section 20. So, finality of assessment, which is finalities of assessment. However, he can reopen any issues if the Director General has already done so. So, all of the appeal process is according to income tax as it is using the same Act. Moreover, the appeal can be made for any years of assessment for cases by producing a notice on it.
Warahmatullahi wabarakatuh. My name is SYU'IB bin ZAINUDIN and I will be present about the reason to consider for appeal. The first point is anyone who disagree with the local government decision to object may file an originating motion to appeal to the High Court. Given that the municipal authority gets involved, the amount of the rate contested after the initial motion is filed. Within 14 days of the local authority decision received, the individual who disagree with it must file the originating move. Any person who have made an objection in the manners prescribed by Section 142 or 144 is dissatisfied with the decision of the local authority. Second point is when the name of any person of the particular of any rateable holding that should have been placed in or removed from the valuation list. Next is if any building erected, modified, altered, demolished or reconstructed or other improvement made to the value of rateable holding. Lastly, the reason for appeal is if taxpayer receive a notice of easement and disagree because of that reason, they allowed to make an appeal. Taxpayer may also exercise the right of appeal in relation to advanced assessment, additional assessment and amount of refund.
Next, we move to the appeal procedure. The first thing we need to know is that if any of the individual is dissatisfied with the assessment, he can serve written notice of the appeal to the Director General within 30 days of the assessment notice. During the submission of written notice, the appellant must include 4 copies of Form Q of assessment for each year and one of which is the original document. The complete form including stating the date and amount of tax payable in dispute, clear grounds of appeal and signed by the appellant then will be submitted to the Inland Revenue Board of Malaysia. Forms that are incomplete will be returned to the appellant, but if the appellant fails to submit a written notice of appeal in the time frame, he can apply for extension of time using Form N and submit it within 7 days of the deadline for filing an appeal. After the form is submitted, Director General will review the grounds of the application, whether it is eligible to be postponed or not. After receiving the notice of appeal, the Director General must review the disputed assessment within 12 months. During reviewing session, if there is any mutual agreement between the Director General and the appellant, then the appeal is considered completed. Director General will need to provide the appellant a written confirmation of the agreement. However, if there is no agreement achieved, the appeal will be referred to the Special Commissioners within 12 months upon receiving notice of appeal. If there is mutual agreement achieved at any time before appeal hearing conducted between Director General and the appellant may withdraw the appeal. Then the Director General must serve the original agreement document to the Special Commissioners. If Special Commissioners are pleased with the agreement, the hearing will be cancelled.
Assalamualaikum, my name is NURUL and SYAMIRA, and now I will explain about the role and function of agencies involved in appeal proceeding of RPGT. So firstly, the Inland Revenue Board. So this is the main agency that involved in the collection of real property gains tax. Thus, in appeal proceeding in accordance to Section 99 of Income Tax 1960, the Director General of the board is the one that receive and review the appeal application that made to the Special Commissioner in writing. In reviewing session, the Director General may ask the appellant to provide particular details concerning the RPGT, assessments, produce necessary documents, or summon any person as the evidence if necessary. So the process of reviewing must be done within 12 months from the date of the appeal received. Next, He also has a function to make an agreement with the appellant after the review. Before forwarding the case to the Special Commissioner, the Director General may come to an agreement with the appellant if he could. So the agreement can be either in writing, oral agreement with confirmation, and proposal to be rejected or accepted by the appellant if the Director General confirm that the tax payable has increased, reduced, or discharged based on the agreement. So if both parties can reach to the agreement, then the appeal process will be stopped at this stage. If there are the parties that dissatisfied with the agreement, so the appeal will be forwarded to the Special Commissioner. So this is the second agency involved in the proceeding. So the role of the Special Commissioner is to conduct a hearing session. He will serve a notice on the date and the place of the hearing to the appellant and the Director General of the IRB for at least 28 days before the day of the hearing session is conducted. After hearing session is done, he also the one that issued the deciding order. So Special Commissioner will issue a deciding order on the appeal heard, and this order only contains the decision on the assessment, which is either to discharge or confirm or to order the Director General to amend the assessment made. Lastly, Jabatan Penilaian dan Perkhidmatan Harta, JPPH. So JPPH also involved in appeal proceeding because sometimes the Director General may appoint a valuer from JPPH to determine the market value of the subject property upon acquisition and disposal. And this valuation report will be used as the evidence for decision making in appeal proceeding. That's all from me. I will pass to the next presenter. Thank you.
Okay, next is for the conclusion. For a nutshell, consumers should be aware of certain fundamental information regarding recording gains from real estate sale. The understanding of owning real estate at a young age has grown, but many people are still uninformed about disclosing the earnings from selling real estate. It is quite advantageous to have a basic understanding of the RPGT. Individuals are free from paying RPGT if they sell a piece of property after 5 years of ownership. Besides, every taxpayers are permitted to file an income tax appeal if they are dissatisfied with the income tax assessment, believe that personal relief have not been properly granted, believe that they have forgotten to claim certain expenses or relief, or believe that the IRBM office has made a mistake during the assessment process. The knowledge of one's legal rights and potential legal remedies is crucial for taxpayers. Once they have chosen the best course of action, such as filing a judicial review application or an appeal, they must make sure that they follow all relevant procedural requirements. Okay, lastly is for your recommendation. The property gain tax should be noted if they are aware of their tax. If they buy their property now, the value can increase later, which could have an impact on their real property gain tax. By making a property purchase now, they can lower their tax bill. Purchasing real estate now, however, might dramatically raise its worth afterwards and have an impact on their tax payment. RPGT is a category of tax that Malaysian citizens and companies are required to pay when they sell real estate. The RPGT rate for selling the property will be lower the longer they own it. They need to check their calendar. Calendar is crucial for determining the RPGT rate because they need to refer the date of SPA. When it comes to holding period for investors and property owners, RPGT is determined by the length of time. The RPGT rate decreases or becomes 0% the longer they wait to sell. So that's all from me for now. Thank you.